Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep. With your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Friday edition of Benzinga's Pre-Market Prep. Spencer Israel here with Joel Elconin and Dennis Dick. Today we are talking about the change in sentiment that we saw it a little bit yesterday morning, Wednesday night, Thursday morning. We saw it a lot more during the day yesterday and after hours. So we'll talk about just the general flip in sentiment from buy the dip to sell the rip. We have, of course, a number of big earnings to discuss, from Amazon and Apple yesterday to Chevron and ExxonMobil this morning. So a lot to get to. Jason Raznick will join us at 8:45 to give us his thoughts on this market, but I'll throw it to Joel now. Joel, give us a quick recap on the overnight session.
Good morning and happy Friday. It's Friday. I get to see people on the weekend. I get to see my wife and my two daughters, my major excitement, the weekend. S&P's deep in the red here. Sell in May and go away seems the theme. We're down 61.5 handles, 28.41. Weird close. You bounced around quite a bit. You got the last print at 29.0250, and you never even got to look at that. Open lower off the Amazon news. You got a high at 28.79 and a quarter, 30 handles away, almost 40. So that's a big area to fill the gap. On the downside, we stopped at 30.75, folks. I don't have anything there. I think the question for today, are we to go all the way back down to Monday's low at 28.1275, or are we just going to meander here in this area? Another good day for crude, up 55 cents at 22.40. Gold in the red. Gold sinking here under 1,700, down 610 at 1688.20. Silver just under 15, but up 2.2 cents at 14.99.5. And call that a 9 handle on Bitcoin, up $155 at 9,085. Nice rebound for the Bitcoin. Triple D, did you have any fun last night?
Oh, it's always fun. We always have fun trading, and this was just the most predictable reaction to all of these earnings possible. I mean, Amazon runs up a sickening amount before the print. I don't know what people were expecting, but they ran it to an all-time high. And, they're just expecting, these Amazon numbers are just going to be fabulous. And you know what? The Amazon numbers were fabulous. But there was just nothing left. Price for beyond perfection. The bar as high as you could possibly make it. I mean, the Amazon numbers were really good, but it doesn't matter, and obviously, in an earnings perspective, but that was, something else. We were looking at the sales, and the sales beat. And, they said a lot of good stuff on the call, but it wasn't going to matter anyways. If they would have blown out the earnings, and then blown out like the EPS number, we know Amazon's never cared about the EPS numbers. All it's ever cared about is sales. And the sales were really good. And they said a lot of good stuff, and on the call. But the stock's down significantly. It didn't matter what they said. Even if they would have blew out the EPS number, the stock was going to go down probably after the print. They just ran up too much. Apple, same story. The Apple numbers were good. It rallied a little bit on the print because they were good numbers. And again, same story. It just run up too much. So you're seeing profit taking. We saw this happen with Facebook and Microsoft on their earnings, and Qualcomm, as all those stocks were significantly higher, and a lot of them gave back a majority of the gains. We saw it with Twitter yesterday. The same thing happened here. People bucking profits. Rallies are to be sold. We saw that start yesterday. I said it on the show yesterday morning, and it's continuing here. And now people are in full profit-taking mode. So anyways, give us the numbers. I know Amazon didn't beat on the bottom line, but I was looking at the top line. But, the sales guidance was good. Everything else was okay. Talk with the Amazon report, and we'll talk the Apple report too, and we'll break these two majors down.
Yeah, the bottom line was a surprising miss. EPS $5.01 versus a $6.27 estimate. I think everybody underestimated just how much money Amazon is spending right now to get through this crisis. The revenue they beat, like you said, Dennis, 75.5 for $73.74 billion. AWS, their key driver, topped 10 billion in revenue for the first time ever, 10.22 billion, which is just below what the estimate was, but still notable to see that growing 30% on a year-over-year basis. Also said their ad revenue grew on a year-over-year basis 44%. So they said a lot of good things on the call. They're investing heavily. They're spending $4 billion, if not more, to get through this crisis. They're hiring more workers. They're staffing up. They talked about that at length on the call. So a lot of their sales were up across the board, and they're investing heavily. You said, Dennis, they've never really cared about making money and being profitable. So everything they said from this report seemed good to me.
It was fine aside from the earnings miss. So maybe they're hitting, directly the algos look at the earnings miss, but I just think it ran up so much. The sales were good. They were good. I mean, they weren't like spectacular though. So maybe if they were spectacular, maybe the stock would have caught a bid after hours. But when you're buying stocks that are running up 100 points ahead of the print, 150 or 200 points from where it was basically the day before, you're asking for trouble. You're chasing. I mean, Clorox, the same story here. Clorox numbers were awesome. They were bidding this thing up $7 last night. It was trading 193 ahead of the print. So the people who are coming in and buying at 193 on Clorox are down $2 on a blowout earnings. You're doing it wrong. Don't chase. Don't chase. Don't chase. Chasing in this market is the recipe for disaster. Don't chase.
That's been the theme of the week.
It's been the theme, not of the week. It's been the theme for 2 years. We've been in, a bouncing around market. It paid to chase in 2017. It paid to chase at the beginning of 2018. It all turned really 2 years ago. And it's been a contrarian market. If you've been buying dips and selling rips, you've been killing it on everything. If you're buying the rips when the stock's up 100 points and then selling, like today when we're in the hole, you're in trouble. You're on the wrong side of the trade. So okay, go ahead on the Amazon.
I just want to say, I do think one of my buddies texted me on the conference call. They preface things by saying, everyone should sit down. I don't know. I'm not seeing those comments in pro. So maybe they were a little cautious on the call. I did, Spencer and I just happened to be covering the stock and jammed it into the close right at, what it would be, 24.75 now, and then it closed at 74, and then they just hit it. It went red immediately. We were looking for some other charges or something in there that maybe impaired that number, but it didn't. I'll just give you that low, and I talked about this yesterday on After the Close show. We got to 23.15 even, and we hit that area twice. Go to your dailies, and you got your 2 and 3 day lows right at 23.06, 23.10. So you got to give it down to 2,300 in a stock like this. And I think, they'll keep it above 2,300 today. But moving forward, I think that's going to be a huge level.
Yeah, Amazon, I think it was just we didn't realize how much money that they were spending. I mean, they said they're spending $4 billion, if not more, of their operating income to get through this crisis. So they're playing offense here. They're one of the few companies that are playing offense. They are spending money to get through this. They are hiring workers, and obviously it's going to impact their earnings. But revenue came in strong, even in advertising, which everyone has been concerned about. Google, Facebook, Twitter, concerned about advertising. Amazon advertising came in strong. Yeah. Cloud revenue came in strong. So it was a good report all around. Nothing really bad to say from Amazon's point of view.
The numbers were good, but not surprising. And the media will run, they missed on EPS, because they will always find a fundamental reason to sell the stock. The media hasn't talked about the bottom line on Amazon for 10 years, but they'll talk about it today. And they'll say, it's a big EPS miss. So, they have to have a fundamental reason because they can't talk like a crowded trade. They can't talk the real reasons why. They have to have a fundamental reason. I know I talk to the media and they don't want to hear anything technical. They want to hear a fundamental reason justifying every single move, because people that aren't in the stock market don't want to read about technicals. They want to hear what the fundamental reason was that my Amazon is down 119 points. The simple reason is it was crowded to the upside. It was crowded. Everybody's hiding out in it. And you know what? In all likelihood, we're not saying, I'm just saying why it's down. But you know what? If somebody asked me last night, is Amazon dip going to get bought? Probably. I mean, think about Amazon still. It's still loved. The story is completely intact. It works if we are in a lockdown. It works if we're not in a lockdown. So in all likelihood, this dip probably gets bought. It's probably a stock that I should buy. I've never been able to stomach the valuation, which is why I've never had it in my long-term portfolio. I've never owned Amazon because I just cannot stomach something that's trading 100 times earnings. But I mean, it's paid. And the growth was always there. And I wish I would have been putting in my portfolio, at $300, $400 when everybody was pounding the table, 5-7 years ago. But I didn't. And I'm not going to put it in there at 23.54. It's just not my kind of stock. But I'm not going to argue if you do, because I will tell you, like the Mark Cubans of the world, I believe Amazon continues to go higher. I will trade it. I trade it all the time, but it's not going to go in my long-term portfolio just because it's not my style. So you know how I like my value. And
you got your value. Let's go to a value stock that did have a nice pop. Apple.
Yeah, this one was a little bit more of a mixed bag. I'll give you the Apple numbers here. The EPS for Apple yesterday, $2.55 versus a $2.26 estimate. So that beat. Sales also beat 58.3 versus $54.5 billion. So a beat and a beat, but they didn't give guidance, and their iPhone revenue fell. Here, let me get the number here. iPhone revenue, I just had it. 1 second. iPhone revenue fell 7% on a year-over-year basis. That was partially offset by a 16% rise in services, which is nice. iCloud, Apple Music, subscriptions, etc. But to see iPhone fall the way it did, and for the company not to give guidance, doesn't inspire as much confidence as a report like Amazon's would have.
And again, media is going to cite the same things. They want a fundamental reason for the fall off. Bottom line is Apple's report was fine. Apple's report was good. If Apple was in the gutter going into the report, it would be up $10 on this. But it wasn't in the gutter going into the report. It had run up into the report. It was trading at the highs of the move going into the report. It had gotten back its entire losses from February. So if you look, at the beginning of March, the stock was trading at $300, and we kissed it last night in the after-hour session, got up to 301, and then they pulled the rug out from under it and said, "No, we're taking profits." And the profit takers came in and they hit it, and they hit it for the next half an hour until it finally went red, and now it's sitting down 7 points. And again, media is going to look and find the fundamental reason for it, but it's profit taking, folks. People are taking profits. They went from the fear of missing out to the fear of losing their profits. So I don't know what you can call that. FOLP. I just made up a new acronym. Fear of losing profits. That's what this market is. It's not the fear of getting killed here again. People aren't scared that this market's going back to 250 or 260 SPY. I don't think that's happening anytime either. They're scared that their profits that they made in the last month and a half, since they've, some people bought, apparently everybody on Twitter bought it in the end of March. I wasn't that smart. I didn't step in until we got into the pullback in April was when I started to load up, because I wasn't buying the catching the falling knife. Apparently everybody else on Twitter and every media person that comes on, every analyst that comes on, oh yeah, they all bought at the middle of March on the very fall. And
March 23rd.
Oh yeah, they all bought the very bottom on March 23rd. So, and I've talked about this before too. And it's very disingenuous the way people, come on. They're not lying. Like I buy and sell stocks every day. So I'll tell you how this works. I buy and I sell stocks every day. So when the market goes up from where we are now, I could say, oh, I was buying stocks on March 23rd. I probably bought 50 stocks on March 23rd. You know what? I sold them on March 23rd and I sold them on March 24th. I was already in there buying and selling. I also shorted stocks on March 23rd. I would have shorted a lot because I trade market neutral. So you can always just highlight what you were doing right and forget about what you were doing wrong. And that's what the people come on CNBC, the people who said that they came in, I bought everything. And I'm sure there's one person that actually did just buy on March 23rd. And I'm sure there's maybe even a couple of smart traders in their chat, or, lucky traders more than anything, because at that point in time on March 23rd, if you were buying stocks on March 23rd, you got lucky because it was a falling knife and there was nothing to lean on. We were in a free fall. We didn't know what was happening there. Yes, valuations were extreme, but it looked pretty ugly at that time. If you were buying stocks at the beginning of April, then you had a level to lean on. So when you get the people that come on CNBC and they say, yeah, we were buying stocks on March 23rd, or we were buying stocks right at the bottom, they're probably not talking about the stocks they were selling too, though. They're just highlighting what they were doing right. So, so it's true what they're saying, but it's a little bit disingenuous on how they're showing it.
Apple did get that spike over 300. We did notice that. We had a high. I mentioned 301.48 as a possible. No, I didn't. I mentioned 303. It only got to 301.48. That was really quickly snuffed out here. But I mean, as far as support goes, this is a pretty clear line in the sand here. I like this. I like this first setup to see what this stock does. You had your 2-day low at 83.89. I mentioned that yesterday. We closed well above it. And lo and behold, you've come down to that level a couple times. You've come down to just above that at 84, 84.20. So I think bulls are still firmly in charge here as long as you hold 384 or 284 or what is it? Yeah, 284. Under that, you could give a little bit back, but no, there's a buyer there. Buyer at 284 until you get rid of him. I'd have to say this thing is poised to go back up.
I think we'd shop around, and I'm not saying, and I gave a rant yesterday when we were 287, 288, and saying it felt like it turned. It did turn. On Wednesday night, when everybody was just buying everything, you squeezed the hell out of the shorts. Kramer was even saying it on Mad Money last night. You could just see it. It turned. So the sentiment turned towards the market, and it turned from, like I said, that fear of missing out to that fear of losing my profits. And people were booking the profits. And, when you had Facebook trading up significantly and, giving back the majority of gains, Twitter was at one point, at 30, up 35 in pre-market yesterday, and it's 27 here now. People are turning around and booking their profits. I wish I would have booked my profits in Twitter. I did not, but I wish I would have. With that being said, if you are coming in here and selling your stocks now, if you're selling Twitter this morning at 27.73 and somebody just sold it literally 10 seconds ago at 27.73, I believe you are doing it backwards. Because if you're looking, what did I say to start the show? Buy the dips and sell the rips. Twitter, it's a nice pullback here now. If you wanted to enter the stock, I'm in from 23. I'm holding on to it. I'd almost be tempted to add to the long at this point in time. If you think that, we're somewhat, going to start reopening, and we're not out of the woods in the long term. Get Scott Gottlieb. I think it's going to be a long COVID battle, but I still think the news flow in the next few weeks could be okay. So I think you're getting a pullback in the market that actually is attractive to potentially buy. I think we could pull back to 280 on SPY, another 40 handles from here, but you had an area of congestion where the 50% retracement was before that, 279 to 280. I think that's going to bounce the first time we get down there. So you might get a nice opportunity here to go into some quality companies. I'm not talking about going and buying the dash for trash, because when you're dashing for trash, it gets hot for a few days and then eventually it's just trash again. And those stocks can really get hit hard. But stocks that you've got on your shopping list, now you're getting a pullback. Am I buying Apple? No, I already own it. Am I buying Twitter? Probably not. I already own it. Am I buying Google on the pullback? Probably not, because I already own it. But stocks that are on your shopping list that you don't own, you're getting an opportunity to get in. So I might go and look at a few things here and think about maybe I will enter, a couple of, other positions here. So buying dips and selling rips has been working, and I think that continues to work.
But what about a name like Clorox here? And we can talk about this one, but they
had okay, so I had made a trade on this last night. This was, I went long it on the close because I'm like, they're probably going to beat and they're probably bet it up. And then it started trading down right after 4, and I was like, well, that sucks. And then it came up and it went up a little ways, and I actually ended up making only a point on it, and I could have made a lot more. And then Kramer talks about it on CNBC and on Mad Money, and it just continues to go up. And it goes all the way up to last night. Ahead of the print, they were buying this thing up to 193. Ahead of the print. So I shorted it last night because I'm like, here's my scenario. I think Clorox probably blows it away, but I don't even know if it has any more upside above 192, 193. I think that the people who are buying it right now are, I think I don't see it going to 200 on their report. It's Clorox. I mean, it's a consumer products company. So I felt like everything was priced in last night was trading 192, 193. So I shorted it last night after hours. I took it through the print. And I looked at the print, and I was like, nah, that sucks. It probably could go up a little bit more. But here, I ended up actually being able to cover it at like 190. I covered some at 189 and change. I covered some more at like 190. I covered a few different points. So I ended up averaging out probably about 191. I actually made money on the trade. I think I made $1. And so here it was. I shorted a stock that blew the numbers away. It's up 6 points, and I still made $1 on the short because it was just bid up so much last night. People just crazy. And now it's bid up here again, and now it's a 192.83. And it was a good report. It's probably worth it. But when you're willing to pay, the person who's paying 192.83 right now bidding it is fine because we know it's a good report. There was people who were buying this last night. You don't even know it's going to be a good report. What if it's probably going to be a good report, but what if they give, a little bit of bad guidance, or what if it's not as good as everybody expected it to be? So here it is. It's everything that the bulls expected it to be. And the person who bought last night doesn't even make money. That's when you know you're making a bad trade. When you have everything work in your favor in the fundamental analysis and you don't make money. So whoever shorted last night, even if they scratched the trade, it was a smart trade to make because your risk reward was set up. Because if they said anything, if they just beat by a little bit, the stock would have got the beats. But they blew it away. So it was a worst case scenario for the bears. And if you're shorting last night 192 and 193, you don't even lose money.
There's some daily significance there too. I looking at the high at 193.85. You just made that, and then after on the first rebound, you got highs at 193.56, 193.37. So I keep an eye on that whole 193 to 194 handle. We're pretty close to it. If this thing is really going to explode, I think it should be easily to clear 194 and maybe get the next daily high comes in at 198.62. So let's see. The day's not over yet. It's holding a bid here at 192.83 to buck off the pre-market high. But important for this to get into the 194 area for it to really, really take off.
And just to clarify, I'm not saying I'd short it now. I'm saying I'd short it without that information last night up 7 because I don't see it going up, more than 7, even if they blow it away. And they did blow it away and it did not go up more than 7. Could it continue to climb here? It could do anything now. I don't think there's a trade here. It's a really good report. It is a defensive stock. The market's getting beats. There's probably a few people who want to own a stock like this. It could continue higher from here. I don't know where it goes from here. All I felt like was last night, the risk reward was set up that I don't think it's going to go to blow all the way to 200. So I don't mind taking a shot. So it's a different thing, a different trade.
All right.
And it's one of the few stocks up today. There's not much up, but Clorox is.
It was probably going to be up though,
Moderna.
Unless they missed. Obviously they missed, they would have killed it. But it's defensive. So some of these defensive names, even look like Procter and Gamble here, for instance. Procter and Gamble's trading down $1.80 right now. And I don't see Colgate's trading down, so that doesn't help Procter and Gamble either. But I mean, these are the kind of stocks on the pullbacks here that maybe you're interested in. I mean, PG, you got a little double bottom lean on around 115. I don't mind buying that pullback in PG this morning because you know what? If we start to get ugly again, this is a stock that holds up. So think about the COVID list. Go back to that a little bit because some of those stocks still have, and some of them have been hit pretty hard. Even my Activision Blizzard has been hit pretty hard. From the highs, it got up to $67, $68. I still have it. Now you're down 63. I mean, talk about a 50% retracement of this overall move here. I mean, you're starting to get in that area. So, and here it is, it's trading down here with the overall market. But remember, some of these stocks were moving counter to the market for a while. That trade could come back on again. Somebody was talking about Peloton earlier. It's going to report next week. Peloton is trading down here. I still think Peloton's going to blow it away. I'm long the stock. I think they're going to beat on the earnings report. And I think could be a run up ahead of it. So I like the Peloton long here. You got a really nice defined level too. Look at PTON, Joel. What do you think of that? Triple 4, 5, 6 bottoms, same area.
Yep. Full disclosure, long Peloton got a great area of support here. All those lows at 31.
Yeah.
Wow. Look at that.
I like it.
Yep. Great. Well, I'm sorry, 30. You have 3 lows.
Buck down.
Yep. Actually, 4 out of 5 lows right at that $30 area. So keep an eye on that. Did a great 30-minute workout today, arms and legs. I got that normal person day. I got up, worked out early. It was nice. It was fun. You got to get one, Dennis. It's a good workout.
I got the stock. That's as much as I'm going to get on a Peloton.
Okay. All right. S&P's real quiet here, folks. Just treading water here around 28.40. We can't get like a bounce and we can't get a real dip here. I think people haven't dealt with a lower open in a while, so they're trying to scratch in their head is maybe waiting for a pop to sell. But just sitting here, 28.40. Our low for the week. If you think we're going to get back all the gains for the week, then you're going to be looking at that Sunday night low for the Monday session at 28.1275.
I'm not that scared. So I have some stocks. And obviously, I still have a ton of cash. We know in my long-term portfolio. But at this point, I'm not like saying I don't think you come in here and just start selling stocks. I think we got a little more downside. We could have some work, but I think you got support about 40 points below here. So if this gets really ugly, I think you have a nice opportunity to get into some stocks that maybe you want to have. And maybe if you're a long-term investor, you nibble in. But as a trades here, I'm more inclined to buy the dip, although I don't think we're ripping right back. We still have a turn in sentiment. People are spooked. People are taking profits. I think we could eventually bounce back, but I also think there's room down to 280. At 280 on SPY, I'll be buying the dip. That's just me.
What about oil here? Go to ExxonMobil and Chevron reporting this morning. ExxonMobil's GAAP EPS was a 14-cent loss. Adjusted, it was 53 cents. So adjusted came in a more reasonable number. But on the GAAP basis, 14-cent loss versus a 55-cent EPS a year ago. Just to put that in perspective there. Chevron, their adjusted number was a little bit better, $1.93 versus $1.39. Sales for Chevron, $31 billion versus $29 billion. So we knew these would be bad, and they are bad. Although Chevron
looks pretty good.
Chevrons were, actually, Chevrons weren't that bad.
Chevrons look good.
Chevron's not that bad. ExxonMobil, pretty bad.
Stocks trading down. Again, these stocks have run so far. I cannot figure out to buy Chevron here now. Yes, it's best of breed, but we just saw Royal Dutch Shell cut their dividend. Oil is still a mess. And here you have a stock like CVX that has basically almost doubled in a month. March 19th, 51.60. Yesterday, we got up to 95.74. He's talking about a stock that's had a 90% run in the better part of a month. I mean, the easy money's been made on Chevron. You still have oil as a mess. You're buying best of breed. If there's any oil stock I would want to own, it is Chevron, but I'm not buying it at 91.60. I'm not buying it at 91. I'm not buying it at 85. I'm not, maybe at 80 where you got those triple bottoms, I'd be interested, but this is also one that could be a little bit prone to taking profits here too. The earnings were fine. It's trading down simply because it had everything good priced into this too. It had come back way too far. The earnings were fine, but oil is still a mess and they're in the wrong industry.
ExxonMobil did have the run, kind of decoupling itself from the actual crude oil futures. We talked about that a few days ago. You did have the dip, and they took this to 42.98 and got a nice rebound and trading at that high area from the rebound. As the stock made a new high for the move yesterday, I'm really going to key in on yesterday's action. Very important for this stock to clear the double top at 47.60 and 47.68. Really need that to be taken out. Maybe not going to do it. I don't know where you're trading at. You're trading at $46. So I like that as major resistance. Coming back on the downside, need to hold that, that 45.58. I could easily get a look at 44.70. It was the 2-day low. So better defined resistance in here up at the 47.60 area than trying to find support. Also, you can use that closing price as as a marker. That closing price is 46 even.
Lots of other earnings here. Last night was, total we had over 200 companies reporting yesterday between the morning and the close. But can we talk Gilead here? I'm out of Gilead. We know I sold it live while I was on the show there on the pop. I would like to rebuy Gilead. It's now 5 points below where I sold it in the pre-market that day. I've had luck at the 76 to 77 area, and I may be too greedy. It might not come that low, and at that point, it might be actually breaking trend too. I'd like to get the stock back. Where should I buy it, Joel?
Let's see here.
Got to 80 this morning, under $80 this morning. And we also have some ratings. Mr. Israel, I think we have a couple ratings on Gilead as well.
Well, there's a lot of ratings on everything this morning as it relates to earnings. But J.P. Morgan, SunTrust, and Raymond James are all downgrading Gilead this morning to two of them are to neutral, one of them is to sell.
SunTrust to sell.
Yeah, SunTrust to sell, JP
What
Morgan.
do we
and
know?
Raymond
Did we
James.
look at the Gilead note from SunTrust just to see kind of?
Well, I can give you the numbers, the Gilead numbers from
Yeah,
the
give us
earning
the numbers too.
from the report.
Yeah.
Their EPS $1.68 versus $1.57 estimate. Sales $5.54 billion versus $5.45 billion. So beat on both the sales and the EPS. For the quarter, they said that coronavirus did not impact their first quarter results. But they anticipate that business in the short term will be impacted due to fewer patients accessing treatment for HIV and other illnesses like that. But they also talked about how they're trying to fast track their drug remdesivir. All in all, it was a fine report.
I traded this swing
yeah.
trade 3 times from 75 up to like I've honestly I've never do it this well, but I did it really well. I bought this thing at 74.90 2 days before they had the good news the first time, and I sold into the pop around $85, and then I rebought it when it had the bad news come from China at 77, and I sold it at 80 like a minute later because I didn't want to own it. And then I read the China stuff and I'm like, well, this doesn't sound that bad to me. And I rebought the stock at 76, and then I resold it now at 85.90 or 86.90, I believe it was, in the pre-market, which obviously never traded to in the regular session. So I've played this really well. I've done it 3 times. I'm like, do I go for the 4th, or is it like maybe I should lay off? I'm tempted to try to go back in it. I'm tempted right now at $80.91, but I don't know. I feel like a lot of the good news, like, is in it, and what if the next report isn't as good? So I'm torn, Joel.
You're torn.
You're in it. What are you doing with yours? You hold forever.
Yes.
You're like Warren Buffett, you and Lisa.
Yes, I'm not selling. Go out there at 78. You got a pair of lows at 78.24, 78.08.
Do I do it the 4th time? If you do something successfully 3 times in a row, maybe you should lay off. You do something successfully 4 times in a row, you do it until it doesn't work.
Yeah, tell about the GE story.
I had a GE level that was just huge. This was back in like 2001, and it was like when GE was like $130 stock. And I shorted off that level 1 time, 2 times, 3 times, 4 times, making a point, making 2 points, making 2 points, making a point. And just day trading it. And I'm like, well, I did it 4 times. I'm going to continue to do it until it doesn't work anymore. And when it eventually goes through this big level of 133, I'm going to cover. I did it 13 times in a row, and on the 14th time, I finally got stopped out and lost like 50 cents. So you make $1, make 80 cents, make $1.50, make $2, make 50 cents, make 80 cents. And you do it again. So in my trading book, I will say, if you do something successfully 3 times, you have a choice. You can lay off, or you can continue to do it. If you do something successfully 4 times, you continue to do it until it doesn't work anymore. So 13 times is the record. I don't know if I'll ever beat that one again. Gilead, if I do it the 4th time, then I'm going to do it forever. So do I go for it and try to bid 78? Chat, tell me what to do. Do I try to buy it again, or is this the time I should just, I'm scared that the next report might not be as good. I'll say that.
But you're not going to be the way you're trading this thing. You're not going to hold it. You'll trade it 4 more times before the next report.
No, I held it every report. The first one was report. The next one was report. All of them. The reports have I've just been on the right side of them.
Just buy it and forget it, so we don't have to hear you talk about it anymore.
Oh yeah, go for the W. Says whatever you do, don't buy a partial position. Exactly. When I buy a half-size position, I'm always wrong, because it means I'm not convicted in my call. I was like, I kind of like it here. I'll buy a half. I'm always wrong. When I say I'm just buying a little piece, I'm always wrong. Fade me. What's up?
All right. We're gonna get one more stock in here, or is Raz ready to come on?
No, he'll be joining us in 10 minutes or so. So we have a few more minutes here, but we can go Beyond Meat. They called a big downgrade this morning. We can go Western Digital had earnings. Where would you like to go? There's a lot of places.
Beyond Meat, it's fun. The chat likes talking Beyond Meat.
All right, Beyond Meat is catching a downgrade this morning from Wells Fargo to underweight. They're giving it a $72 price target.
The analysts just hate Beyond Meat. They hate it so much. It was funny, though, that day that it got downgraded. Who was the person that downgraded back April 27th? Remember when it's trading up, and I was like talking about it in the pre-market?
Was it Credit Suisse?
Let me look it up on the.
They downgraded to underweight, and I was like, "This is how crazy the stock is." It got downgraded to sell today, and it's trading up $4. That was the top.
Wait, on what day was that, Dennis? How do you remember?
I think it was the 27th because I see the candle.
Yeah, UBS downgraded to sell.
And it was trading up on that. We talked about it on the show. I even tweeted it out. I was like, I didn't short it because I'm like, holy cow, impressive to be trading up on a downgrade. Well, eventually the sellers started to come in and they kept selling it from that. So the downgrade eventually did hit the stock. It was just a 3-hour delay or 4-hour delay on it. But, eventually closed very red. Now you get another downgrade here. Now you look okay. Am I selling it down? Now exactly. You're buying the dips and selling the dips.
Yeah, where?
I don't know. It's in the no man's land here.
Yeah,
At
very good.
$80, I love it as a technical trade. I never loved Beyond Meat as a valuation. It's never grown my long-term portfolio because it doesn't make any sense. But at $80 from a technical trade, it gets down to 80, I'd be a buyer. But it isn't going to get to 80 anytime soon. I don't even know if it's going to get to 90. So if you're a trader buying dips on this, I just don't know where your out is.
92, they got it down there, but the next lows of the brackets were 93. So if you want to try it for buy the dip, maybe buy it as close to 92 as possible, and then let it go if it breaks 92, because on the dailies, man, you have a steep area, and you had a low at 103. That was on the 24th, but your next daily low comes in at 89.30. So kind of squirrely here. I'm just going off that 92 based on the 15-minute chart. But if you're really looking for something on the dailies, you got to look at 89.30, and below that 85.14. But doesn't feel like it's going to get that low today.
What's kind of squirrely mean? I've heard this expression, all my life.
I was also wondering what that meant.
and it's funny Joel just brings that because Joel uses a lot of these expressions, but maybe we should just go look up the definition in Urban Dictionary or whatever you go look it up. What does squirrely mean? What does that actually mean? What does it mean to you? Well, and then we'll look up the actual definition.
Restless, nervous, or unpredictable.
Sounds right. Is that what it says on
yeah.
That's what it says on the.
That's what it says in Benzinga Pro. So it must be.
I like that. That's in Benzinga Pro. You even have dictionary in there.
Yeah.
Holy cow! Benzinga Pro does everything.
It's just a dictionary for Joel's terminology, but yeah, we got some stuff. All right.
Do you want to go that to my vocabulary? I've heard it for years. I've heard it my whole life. I've never used it.
It's also
so when I find something unpredictable, I'm going to say I agree with you, Joel. Beyond Meat's kind of squirrely.
Yeah, and it's also relating to or resembling a squirrel. So if you want to use it as two ways.
We're not saying that Beyond Meat it's going to go to eating squirrels or anything.
That's what we used to call the girls' swim team too, but I can't tell you.
All right, moving on from that.
Getting bad. All right, we're getting some bad tangents on this show.
Rob Hood may get that one. Anyways, let's move on.
All right, moving on back to the earnings here.
Producer keeps us in line.
We can go Visa. We can go United.
The highest job on Wall Street.
All right, I'm taking us to Visa here. All right, Visa had earnings after the close yesterday. They beat on their EPS and they beat on their sales, $1.39 versus $1.35, and $5.9 billion versus $5.75 billion. CEO obviously talked a lot of preached caution on their call, but the report was good. The earnings,
great report.
The earnings were good.
The story is the same for all of these Momo stocks. They've all run a long ways. People are booking profits. That's what it is. We're back to where we were on a lot of these stocks, where we were at the beginning of March. A lot of people have gotten all of their losses back from the crisis, and some people have made some money. So people are booking profits. Visa's got room. 160, I love it. Again, you're 173. It's kind of in the middle of nowhere. It's a little bit squirrely.
Let's see. Right now, it's not showing any signs that it wants to go up. You're trading at the lows of the pre-market session, just sitting there at 173.75. So really, no one's stepping up. If you go into reverse mode, really nice. Ooh, we're a ways away from that. So you got to look at the close. As your first close is way up there at 178.72. And what do you got on the dailies? I don't know. I'd have to maybe wait for at least 170.38, 168.55 at 4-day low, 170.38. That's your 3-day low. Call that whole area 169.65 or something like that. So that's what I'd be looking for this to come down. If you did get a rally into the bottom of yesterday's range, 177.66. I expect you'll find sellers there.
I'm taking us to UAL with a expectations near the floor. They managed to beat them, but still not great numbers here. EPS, they lost $2.57 per share last quarter on sales of $7.9 billion. Yeah, I mean the EPS came in above the estimate, but I mean the estimate was so far underground that doesn't really make a difference. I don't know.
The beneficiary from the dash for trash, UAL, with an impressive 2-day move. Stock went from $24 up to $31. So you're talking about a 7-point move on a $24 stock. The stock went up 30% in 2 days. Now coming back down to earth. Maybe 50% retracement of the move, but I'm going to just tell you, the airline's got a world of pain ahead of them. And there is not we're not getting out of the COVID thing anytime soon. It's going to it's going to ebb and flow, but this thing's going to go on for a while. Airline volumes are, in my opinion, are going to stay depressed here for a long time. Yes, they're going to go up, but Delta talked about having 65% capacity as their break even. I think they're a long ways away from getting back to 65%, any of these airlines, and that's why they're no touch for me.
I'm going up north. That's when I get out of this. I'm going up north.
Not going Disney, not hopping on a plane and going Disney World?
Nope.
Me neither.
I can't wait.
I'm going up north probably soon.
Yeah, I can't wait when they let us out of our house, man. I got my buddy's got some cabins up there, Traverse City, Grayling. I mean, that's going to be like a luxury vacation.
It's good to be isolated too up there. It's better than your cottage right now. Isolation.
That's the theme for the rest of the year.
Yeah.
The people up there don't want people like you coming up there.
Probably true. Bringing our city diseases.
Well, they lifted that. Actually, they were pulling people over at a point. If you had plates from the south going up north. But you had to show that you owned owned something. But now they've lifted that restriction. So
you can go up north now.
Man, $25. If I had to wait on this thing, I know it's trading at 28.38, right near yesterday's low, but really couldn't get real interested in this until you come down and test those lows between 24.5 and 25.5. Kind of have to agree with you, Dennis, on the fundamental aspect. You are at yesterday's low, so if you just think you're going to have a repeat of yesterday's action. Excuse me, yesterday's low, 28.32. So if you just think, hey, they're going to shrug this off and take it right back up, the closing price was $29.58.
Boeing had some good news this morning. Boeing announced a $25 billion debt offering. They no longer need federal aid, they said, and I guess it takes an equity raise off the table.
It was really good. I was actually surprised when I came into I saw this last night before I went to bed. This came out just after 8 o'clock. And then I came in this morning and I saw Boeing trade down $6-7. And I was like, wow, I actually thought it would trade higher on that. I didn't do anything. And then I moved on and now it's up. So I guess I should have just went and bought the stock and not I thought a little bit more, but I gave it about 10 seconds of thought though. I just thought, oh, I'm surprised it's trading down on that. And then I moved on. Should have went and actually bought it because it's up, significantly from where it was in the pre-market. How low did we get this morning, Joel?
Let's see where we go to in Boeing.
I saw 130.6 this morning. I don't know if it was lower than that. When I came to my desk, it was 136.
Right at that open. Yeah, 135.90. You're right. Yeah. If you would have been right there at that open, you could have caught it. And then they had a nice move up to 144. Yeah. Man, the ranges are getting tighter on the dailies. Ooh, opening into the high from the day after earnings. See what happens at 144.65.
This is good. It's really good news. And the rate on it, I was surprised at too. So I know they went different tranches. There was a whole bunch of different offerings. Some is out as much as 40 years. And yes, they're going to be now levered more significantly than they were before. And yes, the rate was significantly higher than their last time that they did a bond offering here. But they didn't have to do any dilution. At least I didn't read the details. I don't believe those were convertibles. I don't think it was. And I saw a 5.25% rate on it. I was like, I wouldn't loan money to Boeing at 5.25%, but apparently there was a lineup to do it. So that's good news. That's good news. Good news for Boeing. I'm actually would not be. I don't know if I'm jumping in just because of the market, but I'm not surprised it's trading higher, and I think there's room to 150, 155 on this. I'm not in it though, and I probably won't go in it. Just thoughts.
All right, Spencer, would you get some more
All right, yeah.
earnings?
Yeah, let's do a couple more before. Actually, Jason is here, so let me bring Jason Raznick on right now. Final guest of the week, Jason Raznick is the founder and CEO of Benzinga. Has been joining us every week, really, since we started doing this show remotely, I guess. And my first question for Jason, when I get him on here, and just right now, is Jason, any idea when we'll be allowed back in the office? Wait, there we go.
You're not there?
You're supposed to be there right now, Spencer.
I mean, geez. Luke's been there all week.
Yeah, I know.
Hey,
Luke's not allowed to leave the office.
Hey, do you guys think Spencer, maybe in the chat room you could say ones or twos. Do you guys think Spencer Israel is tired of me being on the show for you put a 1 and
Why?
2 he wants me on?
Why do you do that?
Because the calendar invite you sent me, the Zoom link's expired. I mean, all morning I've been trying to get on.
Wait,
I'm
really?
not that smart. I didn't go to our Slack discussion
I'm
to
sorry.
find the link.
I'm
And so
sorry.
I just been sitting here. But no, I love you.
I'm
love
sorry.
you.
He sends an expired link. Meanwhile,
Yeah. So
sends
I
the
love-
boss the expired link.
Sorry.
I know.
Good.
I love you. I love you guys. I love the PMP community. I love Joel. You guys just do a tremendous job. And I know the guys in the room are yelling at me to talk about stocks and TAST and stuff, but I just wanted to start off with just saying, honestly, I love you guys.
We love the loved. We love you too, Jason. And let's take it into the stocks here because you were all over this TAST. You gave it to us when it was $1.75. It's now $3.65 as of yesterday's $3.50 here this morning. Did you book some profits?
I did. It's one of my best trades I've had in a long time. I booked some profits, but most of my position, Dennis, is 70% is still in. I booked some profits at 290 or 288, about a third of the position. And I'm upset I did that because when I got this position, when I got in it, Dennis, the guy who gave it to me, guys, I don't come up with these all these ideas myself. Like I don't want to take credit for it, but the guy who gave it to me was very smart. And he said it's either going to be going to $10 or it's, it's going to be bankrupt or whatever. Not bankrupt, but you know what I mean?
Yeah.
So basically a call option. And I like the risk versus reward on this one because they own drive-throughs, Burger Kings, and it was getting crushed. And the Insider Brian I liked as well, Joel. And I just
You mentioned that.
yeah, so I just went in it. But guys, like crystal balls are hard. I mean, they are. I mean, look at Facebook. I thought Facebook would take a kind of get hurt because of the whole all these businesses not advertising. So
I thought so too.
Yeah.
We all
I
thought
sold
that.
my Facebook ahead of the number because I was
Thank you.
I thought that same thing.
Brian,
Wrong. I was wrong.
So I'm not the only guy. Okay.
What made you sell at 288? Was it just a number or just, where you wanted to lighten up? Well,
It's a good point, Joel, because I listen to the show and I listen to how you talk about levels. And so I thought I was being like extra smart. Okay, here's a level that's hard to get over. And
it stalled there.
yeah,
It
it did. And I'll tell you something else, Joel. So I bought a decent amount of shares, more than I normally would buy. I have like a starting position, and then I try to rebuy, and that's what I did with my like Peloton that I own a decent amount of, and I was laddering in, and I got in a lot, too many shares, and when it went down went down like 20 cents one day, I was like, oh my god, I'm down this much money, so I'm like, I got to take some off. That day, I kind of like flipped, and if I just wouldn't look at the market that day, because I don't always go in, then I would have kept it, Joel. But I looked at the level and I thought I was being smart, but in reality, being wrong. And TAST guys are just one of them. I mean, you guys know Tesla. I mean, you guys know the different companies like that. I mean, obviously, by the way, you guys keep asking about battery plays. The battery the company that I'm in is Lithium, LTHM. Joel, if you pull up a chart on it,
Yeah.
You've also told me about lithium, Joel.
Yeah, I'm in it. I'm down on. I'm in it, but I'm down on it.
So am I. So am I. I'm down in it too. My average cost was $7.18, I guess. But I originally started buying it at 12, then 9, then 5, then 4. But I will say to you, Joel, I so believe in this company that I bet you a year from now this company's at 12, and I don't want to
Yeah, I think so too.
You know what? The technicals on this aren't that bad. I mean, it's set up, it's holding up fairly well here. Even like today, we don't know because the market's down significantly, so it's probably going to be down a little bit today here. But if you want to just talk the patterns, we don't ever talk patterns. A little cup and handle starting to form here. You're buying this thing around $6.
So Dennis, do you look at that? Do you
What's that?
Are you looking at like cup and handles and charting?
Yeah, if it jumps out at me, I don't look for that. I'll tell you a story, and this is when you first start trading, and I went from retail to prop. I traded retail for 2 years from 1997 to 1999. I read all the technical analysis books, looked at all the patterns. When I got to bright trading, I wrote we had scanning software. It was called First Alert back then. You could actually do like
you still have
patterns.
that.
A different version of it, but
okay.
I have 2 scanners, 2 different that scan stocks. But I had like one that would look for patterns. And I had a cup and handle pattern finder, and I would look for that. I tried using that thing for 6 months, and all I did was lose money with it. And that's what I was like, you know what? These patterns, they go up, they go down, and they don't work that well for me. So I'm not a big pattern trader, probably because it didn't work for me for the first 6 months, and I moved on. And obviously, I trade off of relationships more than anything, but I also trade off of stories. And I like a lithium story because here you got Tesla. So I would see, this has a nice story. I don't mind the way the chart looks. Maybe I would nibble. That's what I would say. So I want my ducks in a row. Patterns would be something to say, I kind of like what it looks like. So maybe that, but I want the story first. I want a story, and then I want like a thesis that's not based on a chart. And then I look at the chart kind of for the timing.
Okay.
Kind of how I work.
Spencer, Israel, do you mind if I take a couple questions from the YouTube chat?
Yeah, go for it.
All right. So
They love that.
So Benzinga Pro and YouTube chat. I forgot to do that last week or 2 weeks ago, and I just feel bad. So one of the questions about WKHS from Mitch, one of the loyal listeners. I think I said the symbol right. I looked into that. I didn't like that they took the PPP loan, and it was like a big deal. I don't have enough color on it. I put one of our analysts on it to see if it's one that could be in the electric trucking space. I don't have enough color on it at this point, but I didn't love that they had the PPP loan. It was a big thing for it. This is a electric trucking company out of Ohio, I think. But Mitch, it's not enough of a reason to go sell it because what I'm saying right now, because I don't have enough color. By next week I will, because I just need to follow up and have this guy he's my electric expert. I have an electric expert. I literally do. And I'll put him on it, and then he'll either tell me this thing's the real deal or it won't. I don't know how he does it, but he is the guy. He's the guy that when Tesla was getting killed back in the day when it was 260 went down to 80, he's like, Jason, mortgage your house, get a second loan, and buy Tesla. Now, I didn't do that, okay? But he was right.
It's probably a good idea, Jason, not to do that.
Well, at the time, maybe.
You don't want to mortgage your house to buy a stock.
But unless it's right.
Wait a second. Spencer Israel, you're saying that laughing and sarcastic, but let me tell you this. We had a guy who wrote an article for Benzinga about.
Yeah, I remember this. I remember this.
Yeah, so we had a guy wrote an article, Dennis, for Benzinga, man, and it was like, take a home equity, invest in the market. This guy was so right. It's unbelievable.
Who was that? Do you remember?
The market went up for 5 years after
that. Was 6 years ago. I
remember that.
Who was it, Jason?
Logan. Let's bring on the show next week.
It wasn't Logan, but I remember everyone's like, take that article down. And we're like, no, it's a good article.
He got on CNBC. It got him. CNBC was so interested. It was so much publicity. He was fighting with, who is he fighting with from CNBC?
I don't know, but he got ripped on CNBC. So guys, in the room, in the Benzinga, the pre-market room, a guy wrote on Benzinga that contributes for us, basically saying, take a home equity out. It's better than this. You get 3%. It'll cost you 4% interest rate, and you'll put it in the market. And it went viral. CNBC was saying how dumb he was, all this stuff. Well, he was so right. And so Spencer Israel, you're right. I didn't go put in $40,000 into Tesla then at $80, but the stock's at 800. So that 40,000 would be worth 40,000 times 8, that's 300, and let me get my calculator up, $320,000. And I didn't do it, but whatever, you're right. Safer than sorry. So there was 2 more quick questions I just wanted to answer.
Yeah,
one is on Smile Direct. Symbol S is in Sam, D is in dog, C is in Charlie. I should have said S is in Spencer, Israel, but Smile Direct. What I like about Smile Direct, now, I think you guys asked me because I know the founders. Like I texting with the founders a lot, or one of them at least. And he's, one of the presidents of the company. Smile Direct has done a great job at trimming costs, at being proactive with this pandemic. They've absolutely done a great job, and they also built tons of masks. I have friends that got their stuff. The stock has taken off though. It has gone from 445 to 772. And Joel and Dennis can look at charts and tell you more on that. This is a one that it's fallen, but like it would, back in the day before the pandemic, it had a tough time going over $10 after that one earnings report. So it's gone from $4 or $3.50 to $7.72. And I know what happens then. There's FOMO. We all get FOMO. We're like, oh, I didn't say the bad word, Joel.
He's learning.
And so I said, you say, oh, these other companies are just taking off. What are we going to do? Should I buy it? And so you buy it, and then you're the last one holding. I'm not saying Smile Direct is not a company here to stay. They've done some great partnerships. Walgreens, CVS, they've made access to dental care for, instead of braces, accessible. Now the bear, and this is, I call Spencer Israel the bear. So he would say, Jason, Smile Direct, the thing doesn't work. This problem. I've heard, and they had that CBS expose on them. That's what really killed the stock. I've heard great things about it and negative things, but I've heard more great. I do think that stock eventually gets back to $12 to $14, but I don't want to give you like it's going to be back in August because I don't think that's a fair number, but that's what I think. I'm holding my Smile Direct. I did sell some a while ago, but I'm holding my leftover shares. And one day at a time, I see your thing. There has been a lot of call buying. We had our options analyst in Benzinga Pro actually chart out how many call options versus puts over this time versus last year. It was a pretty cool study. And there has been a lot of call buying. So when there's a lot of call buying, usually someone knows something, but you never know. So yes, I'm holding it, but I don't have the nerve to like triple up on it. There are some companies I'm considering tripling up on though, but that is one of them that's not right now.
SDC's had a nice run. 4 was just awesome level. I mean, it's hung there, it sat there, and then it finally started to go just about 2 weeks ago. It basically doubled from 4 to 8. It got up to almost, well, it kissed $8 yesterday, so it's a perfect double. So it's not surprising. You could get a little bit of profit taking here. Go to your classic Fibonacci retracement, 50%, and say, hey, if this gets back down to $6 or $6.20 or somewhere in there, you're probably going to find buyers. I don't know if you're going to pull all the way back down to there, but at $6, you'd be at 50%. It'd be a nice setup. Here, you're chasing it a little bit. I think there's obviously some room to the downside. I mean, it can go anywhere really, but on a pullback, I'd be interested.
So this is the Spencer Israel lightning round. I have 2 more quick stocks. I talk on the show about Wendy's. I don't know why people call me when I'm on the show. I tell people I'm on the show and they call me and the phone rings. I apologize for that. So the Wendy's, I gave you guys Wendy's around $8 or $10 or $11. It's at 1986. Has a decent dividend. It's obviously gone down because the stock has risen a lot. When I was on the show, it's gone up 77.93% since being on the show.
He calculated.
You just figured that out.
Just the first guess that I've actually calculated since he was on the show. That's good.
Well, the day I was on the show, I bought the stock, and so I see it in my account. That is the truth.
Okay, fair enough.
So I did.
What? Okay, so what are you doing with it now?
I'm just keeping it, Dennis. The reason I bought Wendy's was not for this. I don't know why it's gone from this to this. If I would have known it was going to go like that, guys, I would have obviously bought a lot more. But the reason I bought it was for the dividend. I really want to have a lot more dividend stocks and not speculation stocks. So I'm just keeping it. Now, I got to look at the percentage of dividend yield is right now, so I don't know. If it's less than 3%, I will probably sell 25% of my position.
It's 2.52%.
Yeah, so it's getting close. So I'm probably going to sell 25% of my position either today or early next week. That's what I think, and look for other opportunities. 2 more really quick ones. Work has come back. I was down on Slack for a long time. I bought it originally at 35, and then I bought a bunch at 17. It's come back. But the one that hasn't really moved, and maybe we're wrong on it. This is a Luke Jacoby, that Benzinga favorite. You guys may know it. New York Times, NYT. It's up 4% since I bought it, but it was down. And I bought it a decent amount, Dennis, because I thought because of traffic, you guys know, like because of the web traffic and subscriptions, I thought New York Times could really ride the wave. So I'm really waiting to earnings. Spencer, I don't know when New York Times earnings are. Maybe it's the middle of May, but that's one that I'm in. And then Taco, TACO. Those are two of the companies that I'm just being patient on.
Oh, that's really run. Taco's run a
Taco,
lot too.
okay. It's
If
really,
you we're on
really
the line with
fun.
Jason Raznick, he's the
Yeah.
founder and CEO of Benzinga, the founder of Benzinga Pro and everything related to Benzinga. You had been picking on the cruise line stocks for a while,
Yes.
and I know you had some pretty good success. Have been a rally? Have you peeled back on that? Are you still a little bearish? Did you get tanned on it a few times? Tell us. Let's talk about RCL, because I know that
I
you
wish
had some good faith. You know, they're rallying, but man, oh man, nothing that's commensurate with the market.
Joel, you're 100%. I mean, you're as right as can be. So RCL is at 46. Unbelievable. I wish I had my screens to show you guys how I traded these stocks. So I was buying and then shorting. I mean, not buying. I didn't buy. Sorry. I was shorting. So when the stocks went to like when RCL hit 40 or 38, I shorted it. I also did that with the Aramark, I think AMRK.
Yep.
I made the symbol wrong. Might be a RMK. It's the dyslexia in me that screws up those two letters. It's true. It's a problem. But I haven't picked up Royal Caribbean. I'm not as swift to buy the bottoms, Joel, and sell the tops. What I try to do is like look at market sentiment. Now, people are saying this thing's going to be over sooner than later, so people are going to start booking, and it's way undervalued. I honestly, guys, I mean, in the chat room, please, if you're going to book a cruise for next year, put one. If you're not going to book a cruise, put two, because honestly, I don't understand booking cruises right now. The reason I say that, Joel, is because not the quarantine is like when you get these cruise ships can't even land, like you get stuck and the sickness is spread. I cannot believe that the RCL is at 46. To me, RCL, CCL, they seem like the best shorts ever right now. They really do. But you know, when you short it, and you've told me this, like you got to watch those really closely. And so if you don't have that, if you're not focused on the market, you're not day trade, I kind of just like stay away. Oh, we got some people, we got some ones, but we're getting mostly twos. Exactly. Like there are some ones who book. So that does give a sign, Joel, of they're not. Wow, oh, that's the same person putting one in a bunch. Okay, that's you can't. If you could bring 10 different people, that'd be fine. But so I'm with you, Joel. I'm with you on that. You know,
Okay.
I want to short it. I want to short RCL. If Dennis says he'll short RCL, I'll short it with him.
They've been hit too hard, so it's the time to hit RCL was when, you know, and obviously, you know, we were paying the cruise lines there too, was when we were early on and they had the Diamond Princess and everybody was getting sick on it, and I could not understand and fathom how the cruise lines were still trading down only 10% from their 15% from their all-time highs. So they got murdered. And now it's like we're in this like, okay, well, maybe they're going to survive. And I mean, if they survive, then they're buys. But, you know, we're at a point where they're going to need capital raises. People aren't, they're going to be burning cash for a long time. Same with the airlines. The cruise lines, the airlines are the same trade right now, where you've got people who are going to be scared to book on cruises and to book airlines. It's not going to be enough to pay the bills, but can they survive this time without seriously diluting their equity in order to get to better times, which are probably a year out at least? So I think, you know, short term, I probably still sell rallies because I don't want to own these stocks. But if you look like you're starting to get out of this, these things could actually, they're actually cheap if they don't have to do serious dilution. But Boeing, you know, just all, you know, and you know, just going on a tangent here, Boeing this morning raised money at a rate that I didn't figure they'd be able to do. They did not have to dilute the equity. 5.25% they went out. Pretty good. Stocks trading significantly higher. So maybe there is still people willing to loan money to Royal. We're willing to loan money to Carnival Cruise Lines. We know CCL did a raise and they had to do some ugly terms on it, but they still got some capital without seriously diluting their equity. And if they can do that, then there's hope for these companies. So I think it's not a slam dunk short at this point.
Great.
I just want to drop in and say that our managing editor Jason Shubnell just popped in and dropped the link to that article
Yep.
from 2014. I just put it in the YouTube chat. It's also in the pre-market chat
Yep.
from
Yep, I got it too.
2014, and he hopped on to CNBC, I guess, to argue with Herb Greenberg about that article. But it is now in the chats if you want to peruse.
Why did you say Herb Greenberg? Jonathan Yates wrote it. Was he?
Right. And then on CNBC.
Oh, it was Herbie. Herb was on CNBC arguing.
Yeah, yeah.
All right. Well, Herb Greenberg just got out of the hospital through some heart surgery. He's doing well.
Oh.
So we probably shouldn't bring him on and Jonathan to debate this. But well, Herb
Get better, Herb.
Yeah, Herb wrote the longest Facebook post. I think he's doing a lot better. I didn't make it through the whole post, but yeah, that's a great find. I saw that you had posted in the chat room. So yeah, that is a great find. Wait, two small things. People are asking about what happened in Michigan, up in Congress, the people, coming in with the guns. Benzinga is based in Michigan. It was kind of a crazy thing. I think it was more of an act versus real hostile threat, but yes, it did happen, but Michigan isn't that crazy. Second thing on Tesla.
Not all of us.
Not all of us. Spencer's not. He is more sane. I'm a little nutty, but I'm available. If you ever have feedback, guys.
Wait, hold on. So Tesla, Jason, I do want to get your thoughts before we go on that. What do you think of the report?
So two things. The two things on Tesla. The report was surprisingly somewhat positive that they were, still,
I thought so too.
Confident. Yeah, like that part. But I have something else to share though, Spencer. The Model Y, which is the one that's like a smaller SUV versus the Model X, I believe could be Tesla's best-selling car ever. It is by far the best car they've ever made. That Model Y, which you don't see many on the road because they were just getting out there, but I've been in one, and it is the best car they've ever made. I am predicting 300,000 to 500,000 units of the Model Y will move. That is what I'm predicting. You can write that down. That car is so unreal. I don't see competitors coming close. If you look in the news, you saw Hummer delayed their launch. Yes, the Semi got delayed as well. That's the Tesla Semi, which that's for truckers. But that Model Y, guys, when you get in it, I think Spencer will finally believe me that you'll see a Tesla in every parking lot. So I like it. Guys, I am no expert at trading the thing. I mean, like it was at 968. I didn't sell a share at 968. I sold shares a little bit lower, a little bit, but I'm not an expert. So is 781, is it 900? Do I think it goes to $1,000? I do. I personally do, man. I think it goes to two. I think it goes. I just think there's no one in the world to compete. Imagine this, guys. You guys know Benzinga, right? Imagine there was no other financial site in the world. Okay, no other financial site in the world. Well, how would you get financial information? Again, there'd be no CNBC, nothing. What would our traffic be? Well, that's what I think of Tesla. Now, you guys disagree likely because the other car companies are coming out with a lot of electric cars, but their systems, their value chain are not made for that. They're just not, they are just not made for that because they're made for service, and service is on combustion engine cars where they come into the shop and get work. They have 30% more parts. It's a different market. It's a different thing. It's really hard for those companies to come compete with Tesla. That's what I have to say on that. I don't know if that gives you a trade today. Maybe it's a long-term call option, but that is my prediction. And if I'm wrong, you know where to find me.
All right, Jason, I'll have you know that I've been trying to buy the ARKW ETF that Tesla is the largest holding of. So just so you know, I will one day own the stock via an ETF.
That's a great.
I haven't bought it yet. I've been trying to, but I don't want to chase it.
Why? Wait, that is actually a great idea, and I actually wish I would have bought that. I almost bought it like 3 months ago, and then I.
Me too.
No, I did. I had it open one day. But Spencer Israel, I'm shocked to hear you say that. You're the one who thought Tesla was a short at 200. Tesla's Israel.
I don't know if I said that, but
mortgage out on his parents' house and shorted Tesla.
Yeah, that's what I did.
I just wanted to say one thing
I'm just joking, guys.
about the cars, and I was discussing this with my daughter Dana, who's a senior manager in digital advertising for Cadillac. And
we love Dana. We love Dana.
And she's working her tail off, and I'm thinking to myself, man, people are going to be buying cars, and we have potential recession. And then she made a good point, and Lisa concurred. I mean, hey, if you're not taking fancy vacations and you're cutting things, you know what, you're going to want to have a nice car, and that cars are important to people, and especially here in the Motor City. So instead of doing a $5,000-10,000 trip to Disney World, a year every 2 years, people say, you know what, I deserve a break. I'm going to get myself a nice car. I'm going to get me a Cadillac, or I'm going to get me a Tesla, or a Ford Focus, or something like that. So yeah, I do. I do see some hope, just because the shift in consumer spending, people are going to be like, hey, vacations can, I don't, you can control the germs in your own car. You can't control the germs in an airplane. So that gives me a little bit of hope for GM and Ford, and the car companies to definitely adjust my bear stance on a company like Tesla.
Yeah, I hear you. I hear you. I hear you. I know that we're late, guys. I just have one quick question.
Sure.
When you find these trades, Joel, you've said to me, Jason, do you have a limit price? Do you have a exit price? Do you have and I'm really, 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 really bad at that. And I'm bad at that because I'm the guy that has a 20/20 hindsight. I'm like, oh, why did I do this? Why did I sell Facebook at 172 and now it's 212? And it bothers me. And my brother says, Jason, just be happy that you were at Facebook at 90 and it did that. But I'm not. I'm mad that I missed the next 30 points. So when you put these limit prices, like, hey, I'm going to buy it at this price and sell at this price, do you really stick to those things, or do you readjust your numbers if you see a ton of momentum going in? Because
I've mentioned this on the show. Lisa doesn't sell. We just buy.
okay,
So and sometimes it's good, sometimes it's bad. But her, for like when she bought Tesla at 420, I told her to, when it got to 850, we absolutely had to sell it. She said no. When it went back down to 350, I said we absolutely have to sell it. She said no. And so the companies that we invest in, we're in. We're in for the long haul.
I've always wanted to do that, be the Warren Buffett approach and just hold the stuff forever. I never can. So I talk myself out of it. And Jason, I'll tell you that question. I've been trading professionally for 21 years, and I can tell you I'm very good at entering trades. I'm very poor at exiting them. And I'm always one that looks the same way. It's like, I sold this thing and I made a good chunk of money, but man, it went to here. And why did I sell it so early? So I don't know how you break that.
Speaking of that, we will, I'm sure, be discussing on Monday what Warren says over the weekend. His annual meeting is tomorrow.
Oh, it is?
Yes.
Is he buying anything?
Yeah, earnings are after
so
the close
quiet
today.
Yes.
Earnings are after the close.
Spencer Israel, are you going to cover the meeting live and like have the show going and like talk about some of the trades? Come on, Israel.
Well, I can't talk and listen to him at the same time. So I'm going to just, I'm going to listen.
You have 2 ears, one mouth. You got your 2 ears. Come on.
It's true. All right. But yes, so that is tomorrow. So for those interested, put that on your calendars because it will be on the top of every financial news site over the weekend. Jason, I want to thank you for coming on. You've been on for way over, but that's okay. We love having you. So thanks for the time, Jason, and we'll let you go. And
can I just say one thing before I hang up? I'm on Twitter at Jason Raznick, JSONRAZNICK. Please give me a follow and engage, or send me an email at jason@benzinga.com on anything that we could do better at Benzinga, or anything with the show. And please tell a friend about the show. The show is so great. Please tell a friend. That's what we do. We share. And thank you. Thanks for having me on, guys. I love being on. And just again, want to say, I think the show is amazing. I tune in every single day, and you guys do a phenomenal job. And I know I don't get to say that enough. And I really just want to say it. So just want to say it. So thank you. Thank you, guys.
Thanks a lot, Rez.
Thank you.
All right. I want to wrap us up here. It is 9:15. Thank you to Jason for joining us. Thanks to everyone in our chats. Very active chats today, both on YouTube and on premarket.benzinga.com. Catch a replay of this show on YouTube or on whatever podcast platform you prefer, whether it's iTunes, SoundCloud, Stitcher, Spotify, etc., etc. Please remember, all the information from our show is meant to be used as informational purposes and not for investing or trading advice. You can catch a free trial and discount to Benzinga Pro by clicking on the link in the description of our YouTube video. All right, 9:15, we are going to head out for the day or for the morning. Joel and I will be back with you at 3:40 to walk you through the close. In the meantime, have a great rest of your day, everyone. And wherever you are, be safe.